Asian stock markets, led by the Hang Seng Index in Hong Kong, are performing well, driven in part by encouraging economic indicators from China. Factory activity in China expanded in August, and the central bank reduced reserve requirements, boosting investors' confidence across the region. These small but cumulative policy steps from Beijing are beginning to resemble an actual economic stimulus, fueling speculation of further easing, particularly in the property market. In another boost to market confidence, China's largest cities have been allowed to lower down payment for home buyers and encourage lenders to reduce rates on existing mortgages. This led to a surge in home transactions over the weekend in major Chinese cities, promising not only to lift home buyer sentiment, but possibly also to increase sales in the coming fourth quarter. Chinese real estate stocks saw significant gain due to these stimulus measures, with the property shares gauge rising by over 5%. In other corporate developments, distressed property developer Country Garden received approval from creditors to expand payment for uninsured private bond, further boosting the stock market. China's blue chip stocks gained an additional 1.3%, building on last week's 2.2% rise. Japanese markets are also performing strongly. The Topix index marked a 33-year high, driven by data showing that Japanese companies posted record profit in the second quarter. The Topix trades at a notably lower price-to-earning ratio compared to other global indices, indicating that the market sees it as undervalued. Japanese companies are sitting on an enormous 555 trillion yen, each about $3.8 billion trillion in earning reserves, which exceeds the entire market capitalization of the topics, adding to the market attractiveness. Investors are also keenly watching the tech sector. SoftBank aims for from $50 to $55 billion valuation for the upcoming initial public offering of ARM Holdings, a chip giant. This IPO could serve as a litmus test for the market's appetite for tech investment going forward. Upcoming events that could shape market direction include key rate decisions from Australia Reserve Bank and trade and inflation data from China. The latter is anticipated to provide insight into the country's fragile economic recovery and could exert pressure on policymakers for more stimulus measures. In summary, Asian stock markets are buoyed by positive economic data and the policy moves from China, as well as strong corporate performance indicators from Japan. Both countries have made significant moves that promise to provide stability and growth to their respective economies, driving positive sentiment across Asian financial markets.